as you can see, Commission Vice President Katainen is now here. So we now move to our final panel, where we're going to focus on the EU investment plan, that relationship between all the issues we've been discussing about driving private sector investment in Europe, what's the climate, what are the obstacles, what do we need to achieve. We now want to link that back up with the public investment plan and look at the way ahead. So I'm delighted to welcome Jyrki Katainen, Vice President of the European Commission for Jobs, Growth and Investment and Competitiveness. He, as in the other panel, is going to make some short opening remarks just to kick us off, then I'll bring the rest of the panel up. So, Mr. Vice President, great to have you with us, and over to you, sir.
Ladies and gentlemen, Madam Chairman, sorry for being late. We were together with my colleague Wilhelm Molterer just in the European Parliament trying to win some support for the investment plan. That's why we are a little bit late. Very shortly, investment plan is not a one-off stimulus measure. It's a European structural change. There are three elements in the plan. The first one, the most discussed part of the plan, is EFSI, the new fund which is supposed to share the risk of private investor and thus crowd in private resources for real economy. The second part of the plan is transparent project pipeline, which is supposed to give more or better visibility of economically viable, well-structured infrastructure projects from different parts of Europe. But the most important part in the plan is deepening and widening internal market. We are still lacking of genuine, well-functioning internal market in various areas, such as capital market, digital trade and market, and energy market. And, Madam Chair, I would like to ask your support, your member organizations' support, for this particular part in our plan. Our aim is to create better regulatory environment for private sector to invest in Europe. And it means that we have to change the environment, we have to harmonize the European market and create well-functioning, level playing field, single market to the areas in which we don't have one yet. In order to make it right, we need your feedback. You have to be active and tell us, the Commission, how to regulate the future. It's too easy for the regulator to regulate the past or even the present, but how to regulate the future in order to create competitive advantage to European private sector, European business sector, comparing to your competitors in other parts of the world. So I will be very short with my introduction and repeat once more, please be active, please be vocal, telling us how to regulate the future market in capital market, in energy and digital world. Thank you very much.
Thank you very much indeed, Commissioner. If you'd like to take the green seat there, that would be lovely. Thank you. So we have been discussing all day this very issue in a number of areas. We've talked about digitalization, digital single market, we've talked about trade, and we've talked crucially about better regulation, how to get it right. And I think many people will be struck by what you said about that being the most important part of the plan, not just part of it. Let's bring up our panelists and we'll dive straight into the discussion. I am delighted and honoured to welcome Wilhelm Molterer, Vice President of the European Investment Bank. Please do come and join us. It's great to have you with us. And thank you for hot-footing it from your parliamentary lobbying exercises. I hope it went well, by the way. Luis Mira Amaral, who is Chair of the Industry Council-CIP and CEO of the Banco Português. A very warm welcome to you, Luis. Atzo Nicolaï, Vice President of VNO-NCW and CEO of DSM Netherlands. A very warm welcome to you, Atzo. And last but not least, Robert Dennewald, President of Fedil, the Business Federation of Luxembourg, and President of SA Chaux de Contern, and a Vice President of BusinessEurope. Very warm welcome, Robert. So what I propose to do, ladies and gentlemen, is dive in. I'd like to ask the rest of our panel to react to what the Commission Vice President has said, and really to focus two questions. And if I might start with you, Wilhelm Molterer, how do you see the role of this investment plan? It's been described in many ways. I was particularly struck, Jean-Claude Juncker has called it at various times a watering can, jump leads, all sorts of analogy. How do you see its role? And going back to what the President said about there's not one stimulus measure, no magic wand, would you agree that the widening and the deepening of the single market, the reforms that are needed to get the regulatory environment right, are just as important if we're going to get the private sector to play its role in this public investment plan?
Well, first of all, thank you for this discussion. This fund, let's be quite blunt, is an additional instrument, but it's not the silver bullet. This is not the only single step that has to be done. It's part of a strategy. And we see, if we go to the business sector, for instance, asking them, what's the reason why investment is lagging behind? The main concern is regulatory uncertainty. And therefore the question of better regulation, and I would add less regulation, and the question of creating a single market where we do not have it, and to have the necessary reforms on the level of member states, see labor market, for instance, social system, and all the others, this is part of it. And the Juncker initiative, this fund is also just one element. Don't underestimate that there is something in which is sometimes not discussed. This is the need for advising, especially the public sector, the managing authorities, to make better use of financial instruments, because what is really in is, it is the start of a paradigm shift from grants to revolving funds. And this is sometimes a bit underestimated. Therefore, it's the implementation that counts. We need you therefore for partners. But we as EIB, together with the Commission, have to do the rest of the work, which is also then advising, this is structural reforms, things like that. If this is not happening, the fund will be, of course, implemented, but the effectiveness and the efficiency is, of course, lagging behind the possibility. So therefore, it's the design as such that counts, and the EIB will manage the fund pretty well.
So it's a change in the way we use public money, not for you, the EIB, this is the way you've done it for a long time, but for the EU, for the Commission, a very big change in the way we use money. We'll come back in the discussion, because I just wanted to ask for the rest of you, how do you see the role of this plan? And do you agree, and is it music to your ears to hear the emphasis being put as much on the reforms as on the dosh, if I can put it that way, the cash? Luis, Mira.
Okay. I give you two comments. First one as a banker, the second one as a former Portuguese Minister for Economic Affairs during 8 years. So the first one as a banker, I want to emphasize that ECB has exhausted the tools for monetary policy, because ECB began with security market programs under cliché leadership, after with outright monetary transactions and the quantitative easing, and also negative interest rates for our deposits in central banks. So the monetary policy is now exhausted. So we know in the textbooks that we need to complement monetary policy with a fiscal policy. And I think that obviously quantitative easing will help to devaluate our currency, the euro, but it's far better to have economic recovery based on health investment and spending at home. So I have 3 dimensions of the problem. In short, we need the fiscal policy to complement monetary policy, and then we need to going on with the structural adjustment, not only now in debt countries, but mainly in France and Italy, because Germany accounts only for 22% of European GDP. So Germany is not enough alone to recover Europe. So it's crucial that France and Italy will help the economic recovery. Second point, the core of the European countries need, in my opinion, to boost demand, some kind of fiscal stimulus, or to make foreign direct investment in our in-depth countries. Because until now, and I support the Portuguese adjustment, but the adjustment was unfair and unbalanced because it was made only in our in-depth country, and the countries that claim a current surplus didn't help to this adjustment. Third point, and
Very
this is
briefly,
linked with Juncker plan. We need, obviously, a healthy investment plan, and there Juncker plan is a good idea. The last comment, I cannot forget, because I was here in Brussels during 8 years, the energy minister, I cannot forget that, in my opinion, before I was engineer in Portuguese power system during 8 years also. So I have the professional experience, professional knowledge and political experience to say that we don't have an energy policy. We have a green policy where energy is a byproduct. Europe and Japan have the highest energy price. And if you want EU reindustrialization, this is a dream that we have a hostage of high energy prices.
Okay, very much the issue that we were talking about earlier and reinforcing the importance of that. Atzo, Nicolaï, if I could ask you in terms of the role of this investment plan, and one thing the Commission Vice President has said in the past is that we need as much public investment as necessary and as much private investment as possible. What will make it possible? What, from a business point of view, will drive you and your companies to play your part in this leverage effect, this 15-fold leverage effect that we hear about? What's going to be crucial for you to get involved and to play your role in this?
Thank you very much, and let me start with that we are very positive about the plans, but what you concluded earlier, it's not what we say, it's what we do. So where does the money go, and how does it work in practice? And I would like to mention 5 words. I can do it very brief, I think. Where does it go to, the money? Does it go where it is asked most, with all the political pressure, even blackmailing, as Jean-Claude Juncker mentioned it? I do not hope that we do that. Does it go where it is needed most? Sounds nice, but structural funds, it should not be my wording. I think that we should concentrate where it had the most growth potential. Because in my view, everything should focus mainly on competitiveness, and then you're talking about growth potential. So that's my first word, competitiveness. That's the first keyword, I think, and that you can better assess with a more or less independent assessment. I was a former politician, by the way, than by a political assessment. The second word is innovation, because if you look at competitiveness, we all know it's not on energy price, it's not on wages, it's not on whatever. It is on what we have, and what we have is mainly knowledge. We have really a strong knowledge, and don't be pessimistic. Let's be optimistic, and let's realize what we have in conditions in Europe, the universities, the patents, and so on and so on and so on. So that's the second thing. And actually, if you look at these investments, yes, we should take more risk. Of course, managed risk, but we should, and these investments should help with taking risk, de-risk in a way. So that's innovation, that's the second word. The third one is, where do we concentrate? It was one of the questions, more on sectors, more on whatever. In the Netherlands, we have a policy concentrated, focused more on sectors, but not top-down, but bottom-up. But actually, I think conceptually, but also in practice, I think the approach of the Horizon 2020, the grand challenges, that should be the approach. That is dynamic, that's not static. So then you can, I think, in the best way, focus your money. So in my view, grand challenges, this should be the third. The fourth, that's a different one, the procedure, bureaucracy. Please help us. For a big company like DSM with a good credit rating, it's fine, we can find a bank or whatever. But for SME or a regional initiative, I was part of it, it is so difficult to get the money, the conditions, the criteria, the procedure. So please, let's do that better than we did till now.
And
the last one, yes, sir.
That will be a crucial factor for many companies in whether they get involved.
Especially SME. I mean,
yeah.
I have a more easy position perhaps in a bigger company, but for SME it is crucial, absolutely. Yeah. And the last thing, I very much agree on the better regulation and the importance of all these investments linked with better regulation. And by the way, it is nuanced, but I believe that better regulation is, as discussed this morning, is indeed better and smarter regulation, which is not the same as less regulation. You can be very clever in setting standards and in that way give a chance for a part of the business world to meet these standards.
Okay. So key element for you in the private sector will be the type of projects that are chosen and how they are chosen and what the driving criteria, apart from is there political interference and so on, it's more, is it focused on growth and therefore is it in your interest too? Robert, how do you see the role of the plan in plugging gaps in our current investment landscape? And what will drive decisions for you and do you think for the private sector on whether to get involved or not?
Jyrki, you should be very careful listening to me because President Juncker warned you that you should not always believe me, you know. So, nevertheless, if I'm telling you that I think that this plan is a fantastic movement, I'm telling you the truth. I think this will certainly boost Europeans' economy if we do it right. I must say, a little bit disappointed when I saw the list of projects that were submitted by the governments. And maybe that the excuse is that they may have had too little time to prepare the lists. But I see that there is a tremendous need in terms of infrastructure. I mean, this came through during the whole day. We have tremendous need of infrastructure in terms of transportation, IT, communication, energy. And I would just like to pick out one single example which speaks for itself. And unfortunately, that particular project, so far as I know, is not on the list. I'm coming from a small country called Luxembourg. It's a 2 hours drive between Luxembourg and Brussels. Now, we all believe that we should move as much people by train as we can. If I'm taking the train ride between Luxembourg City and Brussels is anywhere between 3 and 4 hours, which is a scandal. Maybe that on the political side, there was not the willingness to cut this time down because this kept Luxembourg far away from Brussels. But that's now my personal interpretation. But can you believe that you have an average speed of 50 kilometers per hour when you travel from Luxembourg to Brussels? And those are nevertheless, in the whole European configuration, 2 important cities.
Sure.
So this would be typically an example of where we could put one project which will be a tremendous and a huge investment on the list of the priority projects that should be going to this.
There's a lot of people in this room who will share your pain on that one. On this question, it didn't start well in a sense, did it? In one sense, it started well because member states, you've said, the ball is rolling. Member states are beginning to announce their contributions. On the other side, we had this enormous, great list. Everything under the sun, the suggestion that people were simply looking at into their drawers. Oh, where are all the projects we've got? Let's shove them all on the list. How do you think that was problematic in terms of the impression this gives the private sector about how the projects will be chosen? How do you deal with that? And I'm thinking also, if you tell member states it's going to be done independently, we're going to choose projects for all the right reasons, they may then say, well, then we're not putting our money in because we want to make sure it's coming back to us. How do you get that balance right?
Well, yeah, actually the indicative list, which was produced together with governments, it's an indicative list, and I would suggest to put it aside. Some of the projects which are mentioned there might get financing from EFSI, but this is not an issue. What will be financed depends on people who are planning to invest something. The EFSI is for private investment. Governments are not the gatekeeper. EFSI is a bank or part of the bank, part of the EIB, and bank has clients. And the clients who can get, in theory, any guarantees or loans or equity stakes from the EFSI are private clients who have the same freedom as any other client of ING Bank or whoever. So governments doesn't select the projects. Of course, in the case that there are public-private partnership projects, then the governments or local authorities plays a role. So it's very much up to you what will be financed. The policy guidelines for the investment come from Commission side, from the EU side. For instance, energy efficiency, energy interconnectors, renewable energy, digital infrastructure, SME equity, R&D, research, things like that. So, but the EU doesn't select the projects, and the fund is independent when they are doing analysis work of the viability of the projects.
I think this is extremely important clarification. We both just came from the parliament. And exactly we had this discussion, and we both made crystal clear the project selection is done purely on professional basis, and absolutely on professional basis, in addition to the usual EIB selection mechanism, and an independent investment committee decides on the question whether the guarantee is available for a single project or not. There is simply no political influence, and we told the guys in the parliament, dear friends, if you want to kill the initiative, then show up as politicians by the project selection mechanism. And I think they are realizing this in the meantime. That means the criteria are crystal clear. Second, it created originally the impression that we are just talking about public investment. This is not true. What you are talking about, making public investment happen with private money, not to increase the level of public debt. But in addition to that, the private sector is invited also to come up, to show up with projects. And this was one of the problems of this famous list. There is no single private company showing up in this list. This is not a surprise. Because if I am a company investing in RD or RD&I never would be interested to show up in a transparent, publicly discussed list. Never, ever. That means we have to have really this approach, this professional approach. That's the only thing that finally counts. But what is positive is that the member states are now aware and realizing their weaknesses, because some of them really haven't really got into this detail. And you can't imagine what's now going on, because they realize here is an open question, here is an open question, we do not have the proper regulatory environment for PPP, and this is the positive thing. The rest, frankly speaking, is done by our professionals. Be sure, you will never be in touch if you go for Juncker initiative with any politician. It's the professional guys that are making the policy.
Okay, so but within that, just a question reacting to what they said earlier, because there was a suggestion from Atzo that you do need some criteria. We've heard today a lot about spending money on interconnectivity, and you pointed to it, energy, networks, grids, so on, digitalization, that those are some of the key areas. So that suggests a cross-cutting, but nevertheless some clear focuses. Or do you say, we're here to fund the riskier things, the things that others will not? That's where we can provide that guarantee, because that's what it is. How do you, within the criteria of saying we'll only select the ones the private sector want to be involved in, Atzo suggested the Horizon 2020 approach is grand societal challenges. Do you think it should be a sectoral approach at all, or do you much more favour these cross-cutting interconnectivity type questions? How do we, within those that are ready, and one other quick question, and then I'll come to you, are there enough shovel-ready projects available to really have an impact on the real economy quickly?
I'm sure there will be enough good projects. There will not be any pre-allocation, geographical or thematic pre-allocation, because we want to be open and flexible with the private sector investment needs. So that's why we don't want to create strict lines, how much money to which region or the areas. So one of the issues which we want to make sure is that we wouldn't, but the FC wouldn't crowd out private resources, and that's why it will concentrate on higher risk projects, the ones which wouldn't fly without public guarantees or public risk sharing elements. Another point, second point, is that the feedback what I have got when visiting member states, I have visited 10 member states from the beginning of the year, and will do 40 more by the end of June. So one of the feedback has been that SMEs are lacking equity. And this is a well-known issue in Europe. Our capital market doesn't function as well as it should function, and that's why EFSI will address this market failure. So this is also very important in a sense that SMEs or startups usually need equity for R&D work or innovation-driven investment.
Thank you. Just in terms of listening to what you've heard about the way projects will be selected, are you reassured by that approach? Do you think that the approach that they are outlining in terms of the way project, driven very much by where there is private sector money, and a question also, this capital markets union as part of this, how important will that be?
Regarding the capital market and the need for financing of SMEs, that's something that I'm living on a daily basis because I'm running an SME company. And I must say that what the Vice President is saying is perfectly correct. Nevertheless, I must also say that if we were refraining from investing, that was because of the fact that the business climate was not as we expected it to be. Yeah. So if you want to give an incitation to SMEs to invest, of course, they will have to have access to the money market, and they need to have the confidence and the visibility to invest. And then you will see that this will change. There's one fundamental difference between European SMEs and, for instance, American SMEs. We finance here in Europe our project by lending money in order to finance our companies, whereas in the States, for instance, you're looking for equity. And there's a fundamental difference because it's a question of philosophy, I would almost say. We are very reluctant to open our capital to investors. We'd rather be 100% in charge of what we are doing. Nevertheless, if you would give me 2 more minutes, Jyrki, I would like to talk a little bit about one thing that came across the lips almost during the whole day, which was the venture capital theme and the need to finance startup companies. It is a subject that I'm extremely keen on. And I have been extremely lucky in my professional life. I have now reached an age where I can look back. So I was extremely lucky, and I think I have now to give back to the society. So when we talk about financing startup companies, we should not only look at the Commission and look at Mr. Juncker and say, please, Mr. Juncker, help us. We should take also our faith in our hands, and we should do our part. And I invite all the business people here in this room to just get involved. For instance, I have as a principle that every 2 years I'm investing as an angel investor in a startup company, where I'm not only spending money into the company, but I'm also coaching the management and make sure that this is becoming a success. Just to give you the rate of success, 2 out of 3 companies are a success in my case. And if everyone would do that here in Europe, we would give such a clear signal to the political world that things are really changing, and together with the instruments that are being put together, we will create a marvelous instrument.
Thank you very much on that. I know you want to come back, but I just want to give you both a chance, both in terms of Capital Markets Union and how important you think that is as part of this whole equation, and also in terms of what you've heard about the way projects will be selected, etc. Does it reassure you? Do you think that will answer some of the concerns? And they're not necessarily so keen on your grand societal challenges, Atzo, but they are saying there are clear areas of priority, just how you would approach that. But Luis first, then Atzo, and then I would like to just see if there are any questions from the audience, and we'll come back for a final round. Luis.
Okay, so I think that the Juncker plan is a creative financial engineering scheme. Why? Because we put a small amount of public money, and we do expect to have a high average, something about 1 to 15 with private money. So it's quite essential that the private sector will have confidence and trust in the European economy. So that it's essential to allocate the research, namely the public research, as the Vice President expressed, very well, very carefully, to give the guarantee to the private sector that all the European policy must be linked to our competitiveness. This is crucial. And after, we have another thing. We have this European strategic initiative. We have European Investment Bank. We have European structural funds. And we have Europe Connect facility. We must work together to link them, because with such a plan, we must finance also railways and the energy interconnection. So it's crucial that the last comment about capital markets. I know that European mentality and the Portuguese mentality is not, with our mentality, it's not so easy to develop the capital markets as we have in the United States. 15 years ago, as a Portuguese minister, I tried to do it and I failed completely. So, and I tried to explain to the Portuguese opinion that financial sector is not only in banking sector. We must develop other financial operators like the capital market, but our ecosystem is not easy to explain it.
But that's a key point that Luis is making there about all these other pots of money. I mean, there has been this battle over, are you taking money from Horizon 2020 or is it just being used in a different way and so on? But making sure that all the EU funding is more accessible, easier to get to, but there's joined up thinking and it all works together. That will be quite central, Atzo, won't it, to making this work for you?
Yeah, and actually the example of venture capital, I was involved with an initiative setting up a venture capital fund in the Netherlands. Precisely all the purposes and criteria I think we use here, we speak about here today and last years in Europe. But at the end of the day, we could not reach the standards of governance that were asked. And of course, that's our fault. Yeah, okay, fine. But at the end of the day, it is a pity for everybody. So let's conclude, at least agree on that. At the same time, it's very good to hear, and I take it as promises about the independent assessment. It's very good to hear. But if I may, one remark on, in practice, where does a company, why invest? And Commissioner Frans Timmermans mentioned in this morning DSM and the example that we did too much in the US. And I know precisely this example because I discussed this with him before, and that's on biofuel. And that is second-generation biofuel, so no food and the discussion. So it is really sustainable in all perspectives.
Good biofuel.
Absolutely good biofuel. And perfectly Horizon 2020 Grand Challenge, everything. But altogether, the conditions of investment, on fiscal, on obliged blending, and so on, it is not possible for us, which is a pity. I'm European, which is a pity for my company, that we cannot do it in Europe, and indeed, we did it in the US.
Which comes back to all the issues we've been discussing. I have to let the Commission Vice President go quite soon because he needs to catch a flight to an informal council. So if there are any questions or comments, I'm going to ask you to really be very disciplined. 1 minute, if you would, sir. Thank you.
Hello there. Thank you for the outline of the EU investment plan. I understand that the investment plan is somewhat related to the current crisis or current concerns in the market. But to me, investment is something, it requires a lot of optimism. So my question for the panel is that if you think that the EU investment plan will be a success, so what will be the most coolest, awesomest impact of it in 10 years or 5 years?
I like the way. So he wants to be able to say, hey, that was cool, that was awesome. What will determine whether he can say that? Any others? Yes, please, sir. Thank you.
Good afternoon. My name is Rod Mosmuller from DSM. A question to the Commissioner. Will sustainability, sustainable development be one of the criteria of your investments?
Okay, very clear, straightforward question. And if I could just ask you also, Commissioner, to react on this point about joined up thinking between different sources of EU funding, because I think it is a great concern for people. Please.
Yeah, thank you very much. First, on sustainability, it's one of the criteria because the investment policy guidelines will follow the Commission's policy aims, like strengthening the potential growth, but also tackling the other policy challenges we have ahead of us, like climate change and things like that. About what is the biggest achievement of the investment plan in long term or in 10 years perspective, I hope it's deepening and widening the single market, which has created new market to Europe, which has created new opportunities for different size of companies. So this will have the biggest impact to Europe, positive biggest impact also in the short term. If private sector itself participates enthusiastically creating better single market in those areas which I have mentioned, I could imagine that it would create positive expectations that something will change. After a couple of years, we have better harmonized internal market in various areas. And no one can say beforehand what happens if we manage to create better single market in those areas. Everything is possible. About the financing, just one issue, Horizon 2020, its size is 77 billion. It's the world's largest research fund. Its size is 47% bigger than 2 years ago. And now we are planning to use 3.5% of it and leverage it. So we will replace 2.7 billion grants 10 times more as a loans. So it shouldn't be a big problem. If you look at the countries in which R&D ratio per GDP is highest, they are using a lot of financial instruments. For instance, financing SMEs, which are doing R&D job.
If I could ask you, Wilhelm Molterer, from the point of view of the EIB, and you are already, of course, providing a lot of guarantees, a lot of loans and so on. How do you see this fitting into the broader work of the European Investment Bank that you've been doing for all this time? Quick point on that, and then we're going to draw some conclusions, and then I will let you go, Mr. Vice President.
First of all, it is a bit misleading. The name is a bit misleading. It's not a fund. What is it about? It is a guarantee facility which enables us to take higher risk portion without endangering the AAA. As simple as that. Second, what is key? It will also change EIB, because what we are ready to do is to serve the market needs, because we are invited to act where market is not really acting properly. That means we have to develop products that are capital relief oriented, for instance, guarantee products, which is extremely important in the market, to go for type of equity investment, indirect equity. We have to go for venture capital. We have to develop, frankly speaking, also us. But what is important, EIB has to play a catalytic role if and when it comes to the establishment of financial instruments. And here we need the business partners, but what we also need is the governments, because my understanding is a government should not spend public or taxpayers' money to make investment happen. A parliament should invest in better regulation. A parliament should invest in capital market environment. And therefore, for instance, to create a PPP environment in a lot of European member states, also in the more advanced economies, in the center of Europe, is one of the elements where I think innovation is really needed. It's not just in the business sector we invite to innovate. It's also the governments, and it's also the public sector that has to be a bit incentivized.
Back full circle to where we began. Okay, one sentence each, because we are out of time. Robert, if I can ask you first. Yes. One priority to make sure, we've talked about the potential role of this investment plan, this not fund, as you say, a bit of a misnomer. One priority to make sure that it delivers this maximum, I hate to say bang for bucks, because we're talking about euros here, but it really has an impact.
Let me speak.
On the real economy. On the real economy, what would it be?
Just one sentence. Let's create a mutual climate of confidence between the business community and the political field, and we just have to bend over and grab the opportunities, and we will conquer the world.
Confidence again, that word that keeps coming back. Atzo.
Please let's not concentrate on where is a problem, where is lack of growth, where we're lagging behind. That's what the Netherlands, for example, did long ago, and perhaps I don't want to judge Europe did too much, but let's grow where the real potential growth is, and that's competitiveness, innovation, and sustainability, in my view.
Thank you. Luis.
Well, as EIB Vice President has explained us, he is trying to overcome some market failures in the financial sector. And I do believe that we need a close cooperation between private sector and the public institution to avoid some kind of Japanization of the European economy. This is, for me, crucial. This close cooperation and confidence, trust between you and the private sector to the European economic recovery. Because, as I explained, quantitative easing is very useful, but is not enough. And Juncker plan is a a useful tool in the fiscal policy, but is not enough also. Because competitiveness is a global approach. We have not only competitiveness in energy, in the fiscal dimension, competitiveness is, in economic terms, is a global and systemic approach.
Thank you very much. Confidence and cooperation. Wilhelm Molterer.
I would start a bit differently. I invite everybody, simply everybody, that in Europe we start to talk about the opportunity first and about risk a bit later. We always do it the other way around. We talk and start with risk, and then the opportunity is gone. Really, this is the first thing. And the second thing is, I think we have to incentivize simply everybody that we make use of market to overcome the problems. The market is the real driving force. And those are the financial market and the financial instruments. If there is, in addition, grants money available, fine. But the grants money is simply, shouldn't be the driver. It should be the supporter for the catalytic approach, what is behind. And I think this is the fascinating aspect of this exercise.
Which goes back to the as much public investment as necessary, to go back to your words. Mr. Vice President, for you, as you travel around Europe, as you go on making this case, what for you is the priority to make this plan really succeed?
The fact is that member states cannot afford to stimulate the economy. Another fact is that Europe is full of liquidity. We are not lacking of liquidity. What is the best way to stimulate the economy in a sustainable manner is to create new markets, liberalize the market and create new markets. And the private sector will take care of the rest. Because there are always, even though we have seen public sector be in trouble, but there are still viable, strong, innovative, entrepreneurial enterprises and entrepreneurs who want to expand their businesses if there are new opportunities. And that's why I'm so strongly speaking about the internal market, because we are lacking of harmonized market. And if we create it, somebody would benefit. So I believe in this entrepreneurial spirit. And of course, I very much support what was said about the research and education type of thing. It's the best investment for the future.
Thank you. So create the space and it will happen. Ladies and gentlemen, will you join me in thanking our panel very much? Thank you, Mr. Vice President, particularly for coming here hot foot from the Parliament. I know you have to go. I know you have a plane to catch, so don't hesitate to slip away.